Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC accountancy online classes. Friends, in the previous class we have solved a problem of XYZ. Now we will move on to the last problem of retirement of a partner, that is problem number 5, page number 57, page number 57, 57. I will read out the problem, let us analyze and then we will solve it. Okay. Yes, Shrikant, Girish and Manju are partners sharing profits and losses equally. Equally means 1:1:1, correct. So 1/3, 1/3, 1/3, 1 plus 1 plus 1 will be the denominator 3. So 1/3, 1/3 and 1/3. Their balance sheet as on 31st March 2017 was as follows. Let us move on to the liability side first. Creditors, bills payable, bank overdraft, normal liabilities, reserve fund. This is an accumulated reserve, correct. Should be transferred to all partners' capital account in their old profit sharing ratio 1:1:1, correct. So by reserve fund in their capital account, we have to credit with the equal amounts because they are equal partners. Then capital balances, there is a starting point by balance brought down on the credit side. Capital account always shows credit balance, right, because capital appears on the liability side. Cash, so all cash interest if required. Bills receivable, stock, investments, debtors, furniture, machinery, buildings, profit and loss account on the asset side. You already dealt with, but still let me tell you, profit and loss which appears on the asset side is accumulated loss, should be distributed among all the partners including retiring partner. In case of admission of a partner, only to old partners we should debit on the debit side, isn't it? Whatever is there on this side should be on that side, that's left hand side of capital accounts of the partners. In case of retirement, you should debit it to all the partners including retiring partner, because retiring partner is retiring today and balance sheet belongs to the last year, right? Yes. Prior to his retirement, this balance sheet belongs to the date which is prior to his retirement. He was there in the business during that time. So 6,000 it is, 2,000 each. Manju retired on 1/4/2018 from the business and the following adjustments are to be made. Goodwill of the firm is created at 18,000, retained in the business. Very clearly mentioned, that is we have to create goodwill to the extent of rupees 18,000. So creating goodwill means goodwill accumulated to all partners capital account because it is retirement, right? So on the credit side of partners capital account, by goodwill, credit with the equal amounts, that is 18,000 is the total amount of goodwill they told. So 6,000 each. That's all. No other treatment for goodwill. Then in the new balance sheet, you have to show goodwill as an asset in the balance sheet. That is what you have to do. Very simple. Clear? Yes. Then maintain provision for doubtful debts at 5% on debtors. So PDD should be created at 5% on debtors. There is no PDD in the balance sheet, right? So you have to calculate at 5%, at the rate of 5%, and debit it to revaluation account, show on the debit side revaluation account, and in the new balance sheet deduct it from the debtors, right? Then increase stock by 4,000. You know it very well. Increase in the value of stock means stock is an asset. Increase in the value of stock is nothing but profit to the business. Show, give credit to revaluation account, and in the new balance sheet stock, inner column, add, increase, isn't it? Then add it and write the total amount in the outer column. Depreciate machinery and furniture by 10% each. Machinery and furniture both are fixed assets. Any decrease in the value of fixed asset is called depreciation. Depreciation means decrease in the value of an asset. So it should be debited to revaluation account and it should be deducted from the concerned assets in the new balance sheet. That's all. Your problem is solved, isn't it? Now let us solve the problem. Revaluation account. Prepare revaluation account. Revaluation account. Debit and credit. I will not tell you again and again. You must write it. Yes. Amount in rupees. Debit, credit. Particulars. JF. Amount in rupees. Right. Let us start. Debit side first. PDD to provision for doubtful debts account. For doubtful debts account. Doubtful debts account. How much it is? 1000. It's created 1000. 1000. Then to machinery. To machinery account. Depreciation. 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 Isn't it? How much? How much? 32,000 into 10%. 32,000 into 10% comes to 3,200. Write it in outer column. What about PDD? 5% on debtors told, isn't it? Debtors value 20,000. So show here calculation. 20,000 into 5%. 5%. Show here 20,000 into 5 by 100. You have to show calculations. Then furniture. To furniture. Furniture account. What is that? There is again depreciation, right? Yes. Depreciation. Show the calculations. How much it is? 25,000 into 10%. 25,000 into 10%. That is 2,500. 2,500. That's all. No other entries on the debit side. Let us move on to the credit side. By stock account, there is increase in the value of stock. Stock account, increase. Stock account, increase. 4,000. 4,000. 4,000. Isn't it? That's all. Now, see which side is greater and find out whether there is profit or loss. There is a loss. Debit side is greater. Debit side total is greater than the credit side. 6,700 debit side total, isn't it? Write the same total on the other side. 6,700. Find out the difference. 2,700. 2,700 by all partners capital account. By all partners capital accounts. What is this? This is loss. Loss on revaluation, right? Yes. Who are the partners? Shrikant, Girish and Manju. So Shrikant, Girish and Manju. You write in full. Name should be written in full. Difference is 2,700. They are equal partners. 1 by 3. So 900. 2700 into 1 by 3 is equal to 900, and again same thing, 2700 into 1 by 3 is equal to 900. So, this is what the loss is. Right here, loss on revaluation, balancing figure. That's all. Your revaluation account is done. Let us move on to the next step, that is combined capital accounts of partners. Combined capital accounts of partners. Yes, draw the lines. Combined capital accounts of partners. 3 columns each on either side. Done. Write the names. Debit, credit is a must. Particulars, write the names. That is Shrikant, Girish and Manju. Write in full. Shrikant, Girish and Manju. Yes. By balance brought down, starting point, by balance brought down 60, 50 and 30. And 30. Then what? Reserve fund is there in the balance sheet, right? So, credit it, reserve fund equal 1:1:1, old ratio 1:1:1. How much? 5,000 each. 15,000 value of reserve fund, yes it is. 5,000 each. $5,000 each. Then we have to create goodwill, right? So, give credit to all partners with the goodwill amount, goodwill account created equal old ratio 1:1:1. How much? 6,000 each, because it is 18,000. Total goodwill is 18,000, they told, right? Then there is a profit and loss account on the assets of the balance sheet is accumulated loss to profit and loss account, accumulated loss. Then refer revaluation account. All partners capital account added to revaluation account. There is a loss. So, all partners capital account added to revaluation account. Accumulated loss. Isn't it? Write it. How much? 900 each. Accumulated loss, how much? What is the value? 6,000. So, there is a profit and loss account 2,000 each, right? 2,000. That's all. No other entries. Close your capital accounts. Find out the difference. Isn't it? So, 41,000 in Manju's account, then 61,000, 61,000, and here 71,000, 71,000. Write the same total on the other side, 71,000, 61,000, and 41,000. Yes. Now, balance this person's, the person who is retiring, Manju, isn't it? Write the difference here, 38,100, 38,100. Nothing is mentioned regarding settlement, so it should be transferred to Manju's loan account, right? Yes. Don't write simply loan account, Manju's loan account, you have to write. Otherwise, the valuer may ask evaluator, whose loan account, is it yours? You won't have any answer, right? So better write the name, Manju's loan account. Manju's loan account, transferred balancing figure. Because this is the difference, right? When you balance it, this is the difference. So we call it as balancing figure. That's all, nothing else. Then here, these two partners find out the difference and bring down the balance. To balance carried down, balancing figure. Balance carried down, balancing figure. Right? Find out the difference. How much? 68,100, 58,100. 58,100. Nothing in other partners' capital account. So bring down the balance. By balance brought down. How much? 68,100 and 58,100. That's all. Nothing in other partners' capital account. That's all. It's done. Your capital account is done. Now moving on to the last part, that is balance sheet of Shrikant and Girish, right? Balance sheet of Shrikant and Girish. Girish as on, what is the date of retirement? 1/4/2018, right? So April 1st, 2018. Don't get confused, friends. If the partner retires on 31st March, makes no difference, or 1st April, you give the balance sheet date as 1st April only. Whether it is on 31st March or 1st April, you just give the balance sheet date as 1st April, because accounting year starts on 1st April. Clear? Yes. Now, 1st April 2018, after Manju's retirement. After Manju's retirement. Manju's retirement. Write this within bracket. Yes. Now, let us draw the columns. Balance sheet. Write the column headings. No debit credit. Liabilities amount in rupees. Assets amount in rupees. Right? Start with the most liquid one. Cash is there. There is cash in the balance sheet. So cash. Is there any movement of cash? No, there is no movement of cash. Refer your capital accounts. No cash entries at all. Right? So it remains as it is. No change. 24,000. 24,000. Then bills receivable 28,000. 28,000. Stock 40,000. 40,000. 40,000 means, that is show the calculation. 36 plus 4 increase, right? 36,000 inner column, add increase 4,000, 40,000. Then debtors, there is a change, inner column 20,000 minus 5%, right? So 20,000 inner column less PDD at 5%, at the rate of 5%, so 1,000, it will be 19,000, 19,000. Then investments are there, right? So no change, write it as it is. Investments 9,000. Then furniture, how much? 25,000. 25,000 inner column, there is a depreciation, right? Depreciation at the rate of 10%. Depreciation at the rate of 10%. So it is 2,500. 2,500. So 22,500. 22,500. 22,500. Then furniture, how much? Furniture already over, I'm sorry. Machinery, now you have to take up machinery. Is there any change? Yes, there is a change. So inner column machinery, refer your revaluation account, you will come to know, isn't it? 32,000 inner column less depreciation at the rate of 10% again, isn't it? So 3,200, deduct it and write the net amount 28,800. Then buildings, no change, write it as it is. Buildings 50,000, correct? Building 50,000, yes it is. Then we have created one asset, do you remember? Goodwill. How much it is? 18,000, right? 18,000. It will appear in the balance sheet because goodwill is not written off, it is only created, that's all. Then creditors on the liability side, asset side over. Creditors, no change as it is. How much? 30,000. Then bills payable is there, 20,000. No change. Bills payable 20,000. Then bank overdraft, no change. Overdraft, no change, right as it is, 25,000. Anything else? No. One more liability is Manju's loan account, retiring partner. Manju's loan account, already retired, isn't it? So no settlement is done. So his capital balance should be transferred to his loan account. It will appear as a liability. Manju's loan account, how much? 38,100. Refer final balance in Manju's capital account. Then capitals. How much capitals? Shrikant and the other partner is Girish, right? Right, their capital balance is brought down 68,100 and 58,100. Add it together and write it in outer column 126,200, right? 126,200. Now check, your balance sheet must agree. Balance sheet must agree. What's the total? 239,300. Yes, it agrees with your question bank answer. isn't it? 239,300. So this level problem may be asked in board exam if they take up retirement. Otherwise, if they take up admission, can't say, maybe mostly premium method, mostly they select. So first or second method. So make sure of everything, don't do any, that is a selection. This I will take it as option, isn't it? Don't do that. Yes. With this, friends, your retirement of a partner chapter comes to an end. There are two parts under this. First one is retirement, another one is death. I will take it as a separate chapter. From next class onwards, I will take up death of a partner. Very simple it is, death of a partner. There we need not have to prepare all these accounts. Balance sheet is not required, combined capital not required, revaluation not required. Only they will give some information. Simply we have to prepare the capital account of the deceased partner, that's all. Or executor's account we have to prepare. That we will take up in the next class. Take your assignment problem. The same problem you just solve. Same problem, solve and submit. Submit your assignment on time. Thank you for watching this video. Thank you.